Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Early last week through the middle of the week, grain and oilseed markets saw a small little spike through the middle of the week, but has since topped from there. And as we can see, the market this week continues to trade a little bit lower. Here we're looking at the September corn contract, and you'll notice that we're very close to the 360-degree mark of 336. After the market made an advance up and found resistance near 373 3/4, that resistance point did hold very well, and the markets are making its way back down. This week, we've noticed that the market has done a very good job of holding our natural support line, but we'll also see a nice little break today, and if the market's actually able to break this previous low, that could very well be an indication that continued weakness is at hand. And if we get a close below the 366 mark this week, then touching 318 or lower is probable. Some interesting movement here for the December contract. You notice that the market made a nice decline down to 385 3/4, then made its way back up right up against the 360-degree mark of 405 3/4. Upon retracing back up to that level, the market makes a potential full cycle move back down that we're looking for it to touch at 329. Part of the reason for that is markets tend to like to make movements in full cycle rotations. So as the market came in, because he broke the 180-degree mark, which was right in between this area here, found some support right up against 347.5 and is now testing it again as it is breaking the previous support that it had. In all likelihood then, we anticipate that a movement down to that 329 is more probable, especially since now we're looking at a movement that is looking to break or at least close below the 347.5, which happens to coincide with our natural support level here as you see the market tracing it in. The point of control for the December contract sits at 419 3/4 as it's been for the last 2 weeks. But in addition to that, 2 standard deviations below that level comes in right at 345.5. which is essentially where we're making current lows right now. So if the market continues to transition its way lower, breaking 2 standard deviations below the point of control, in all likelihood, we're looking at prices to continue lower or sideways. We're noticing some similar weakness for the soybean contract. Here we have the September contract. And part of what we did in our analysis here is we marked off the previous major pivot swing low and pivot swing high, and allowed this swing to give us some information with regard to where the market looks to go. Using this swing, we're able to actually plot this natural angle that you'll see comes through from this low up through this high. After the market makes a decline, we actually use this swing to help us forecast this potential pivot swing low here, which actually tagged at the 1083 3/4 number very well. The market moved back up, and you'll notice that resistance held very well up against this natural angle, and the market fell back down again. One of the things that we've noticed in our research is when the market breaks through these key levels, such as the 1083 3/4, there is a high potential then for the market to come back and at the very least retest or eclipse the previous pivot low. We were really yet to do that, although we did test it very closely here. The market made a nice move up here, and we are once again testing it again. So we're not going to really be satisfied until the market breaks this previous pivot low that we're looking at here. Hence, some of our near-term targets, the minimum price objectives, sit at 1010.5 or even as low as 979. The point of control for this contract is at 889.5. 1 standard deviation above that point of control is at 1060, and currently price is about 20 cents below that area. If this market's able to break this previous low, then what we believe is there is a good chance that this market should continue to trace down, and coming down to about 890 at a minimum is potentially a very good price objective. We ran our analysis on the November contract, very similar to that of the September contract. You'll notice our previous pivot swing low. The market has since come back after touching and breaking the 1076 number, failing up against that natural angle, coming back to test that number, and we're retesting it again. Now we've touched this level 3 times. If the market makes a break this time, or even if it bounces from here and comes back down and breaks through again, the next time it breaks through, we're looking for very strong movement to the downside. A few weeks back on the November soybean contract, we suggested that July 13th was going to be a potential important turn date for this market. As you can see here, the high close occurred right on the 13th. Market made its high last week and has since declined all the way down, retesting the previous lows. A very nice move, as we can see here. Point of control sits at 960.5. One standard deviation above that level is at 1051, and the market right now is trading roughly at about 1030 or so. And so as the market continues to make its move, a move down to the point of control at 960.50 is potentially a nice target. And if the market makes it down there, it looks to be potential support as well. The September wheat contract is moving very much as would be expected. And the consolidation / pullback that we saw occur over the past week and a half prior to the big decline over the last 4 to 5 trading days is consistent with what we would have expected. The market made its way up and moved up into resistance, and we see resistance sitting right at that 446.25 level, which is 360-degree mark. Upon making it up there, you'll notice that the market never was able to even close above that level, went up through resistance, and is making its way back down right now. Now we find ourselves very close to the 180-degree mark at 405. Upon breaking that 405 number, the market should make its way down possibly to 385 or even lower. So wheat continues to be weak. We are not looking to go long in any regard, but instead we would anticipate looking to sell into moves up. 2 standard deviations below the point of control for this contract is at 408, which is currently where the market is currently trading. As we can see here, the market has just touched off at that low price. Continued weakness past that number suggests that the market can even venture to go down to about 390 or so. The crude oil contract is holding up very well up against the 44.70 mark. The market tested this area several times. In fact, we saw a breach today, and the market has since turned back up and has found some strength and is potentially looking to put in a very good low at that 44.70 number. If the market's able to pick up from here, key resistance probably lives at about $50. Upon reaching 50, we would try to see what it does there. If it's able to breach above there, then in all likelihood, he would break the previous highs before topping out and then looking for a potential leg down. If the market does fail at current prices, then our target of 40 may in fact come to fruition. But right now, until we make a definitive, clear move in either direction of the 44.70, we're not going to be able to discern quite the direction that he wants to go. Next week, we'll be rolling over to the next contract as well. Thank you so much for joining us today for our weekly market update, and look forward to touching base with you again next week.